Before we jump straight into the video, I wanted to clarify a little bit of what this video is because it might be a little bit confusing as you don't have the entire context, right? This video is basically a clip of around an hour, maybe less than an hour, I don't really remember. Let me actually check, I can check right now. 20 minutes actually, 20 minutes of me backtesting around 2 weeks, or exactly 2 weeks I believe, on which I was able to cut a pretty good couple of opportunities with the 5 steps, and I just simply wanted to share them, right? Now, the reason why I need to clarify is because through the video I might talk about things that you might not understand, and that's actually because this is again a clip off of a entire video that is going to last around 3 to 4 hours probably, on which I'm backtesting 100 trades with the 5 steps just to get a little bit higher sense of what the the win rate for the 5 steps are, and also as a last video for my private community 1, the private community that I started back in November 24th, and a first video for my private community 2 that you can actually access right now if you were interested. I will leave some details in the description. So that's pretty much it. Again, 5 steps being 1, random buys of liquidity or sells of liquidity, 2, market shift, and the fair value gap being created in 5 or 50-minute timeframes, and 3 being the price trading back into the fair value gap or the fair value gaps, right? And 4 and 5 is basically market shift and fair value gaps in a lower time frame, such as the 1, the 2, the 3, or the 4 minutes, right? And 5 is simply the execution on the fair value gap in the lower time frame. This strategy was created based on the ICT Mentorship 2022, as you probably or maybe not know, right? Just clarifying that. And yeah, that's pretty much it. I hope you enjoyed this video, and talk to you on the next one. Good morning, everyone. We're going to continue with the backtesting, and we'll see if we recover from that week, which was pretty bad. And we took a couple of losses with a bit of a messy price action, right? So let's just get to 7 a.m. and let's see what we got, what we have. 50-minute has not much. 5-minute on liquidity, market shift for value gap through London setup. Present of lower time on liquidity for value gap mitigated. So there's nothing that we can actually use at the time, right? We'll see if anything new is created in the next few minutes. I'm considering or thinking if we should have taken advantage of this. Tiny round liquidity barely goes below that low as well, and we have the fair value gap right here. Due to the aggression, I don't think we get much of an opportunity to buy, and we don't, right? Ideally, we would have executed here or in the market shift line, which price doesn't actually retrace into. And I want to take advantage of this or not. It's a bit of a complicated price action, so I'm actually going to avoid it and wait for something else. Getting pretty high. Nothing that we can use so far, and it's already 10:15. Okay, well, the buy theoretically would have worked because it does continue going higher. However, it's not triggered, right? So there's nothing that we could have done about that. For me, it was a bit of a risky entry due to the lower time frames were okay per se, but the higher time frames, right? The run liquidity is very minimum, and the low that it theoretically took was more like it was creating sells of liquidity than anything else. So I wouldn't really call it much of a good opportunity per se. And now we have the opportunity to sell from this tiny bit of a fair value gap, right, in the 15-minute, or this one, which was, well, actually just mitigated. I thought it was mitigated before with the round liquidity above this highs, right, and the aggressive move lower. So that means that we can already be looking for entries. This is going to be a little bit complicated because they are 15-minute fair value gaps, right? And we could be getting fake opportunities, or not necessarily fake opportunities, bad opportunities that end up in losses just as price gets into more premium prices, right? So we definitely do have to consider that. But of course, if the chance is given, then we're definitely going to be taking advantage of that, such as this one, right? Market shift to the right, which, as I said, right, we are going for something a bit risky. Ideally, we would have everything that we look for in the best way possible, right? So ideally, we'd have a market shift to the left instead of a market shift to the right. Fair value gap looks fine. The displacement is not much, but it is reacting to it, so it's okay. And yeah, now we gotta see if we're triggered, and if so, if it continues to hold or not. Okay, so that's actually a pretty good start. Currently, well, actually at 1.9%, so I'm actually just gonna close it there. We could be going a little bit further than that, like around this low, or just going for the exact 2R, right? Something that we could have done. Personally, pretty happy with that. And if we're trusting that this 50-minute fair value gap is going to cause a continuation, theoretically, we should be getting below this low. However, right, going right below this low would have been more than enough, in my opinion, right? That's, of course, we're not going to be taking anything else on this day, right? Because we already took a win. But we'll definitely analyze and see if any other 5 steps opportunity shows up or not. Our entry actually does not hold. And of course, we could even be looking for another entry in this fair value gap if it was actually respected, but as it wasn't, there's not much that we can actually do. We only participated in a tiny bit of a retracement, that's all that we really did. And by going for that 2R, that was the reason why we managed to get out in profits instead of maybe taking a full loss or something like that, right? Nothing for us to do throughout the rest of the day. Let's just jump for this Wednesday to this Wednesday. Market shift to the right, very insignificant in my opinion. Some liquidity being taken, nothing for me to do. Run on sell side, a fair value gap here. Aggressive move fire gives us 2 fair value gaps. Ideally, I'm gonna wait for price to trade back into this trend line. This market shift line, because at that point we're going to be in a little bit of a better premium in discount and can lead to a much better potential entry, right? But theoretically, we should have executed inside this fair value gap if, of course, given the chance. See if we are given the chance or not. No, okay. It's here. Market shift to the right. No fair value gap, so no. Actually, we don't get the chance to buy, which is a bit of a shame, but well, we would have missed it anyways, so not much of a shame. Market shift, fair value gap after tiny round liquidity, and of course all of the liquidity to the left. So we'll pay attention to see what it does, but of course we also have a run on sell side liquidity, so we'll pay attention to that as well if given the chance, of course. Uh, 15, yeah, no. Difficult for it to create something in that bit of a time. Reacting a bit aggressively, which is definitely not what we want to see when we're trying to look for sells. But we'll see what the lower time frames do. The market shifts with that or with a fair value gap. Oh, it actually does have a fair value gap. Right there between this candle's low and this candle's high, you can see that there is a bit of a gap, and we basically missed out on it. I don't like the opportunity at all. I do like the higher time frames, but the lower time frames are a mess. So what I'm going to do is wait for something else to occur, right? As an example, this is a better fair value gap, so I'll wait for price to retrace close to it and basically execute on that. And if we're missed, well, that's basically having the 5 steps but not executing them, right? And yeah, could put my stop loss above this high, and I think I should at this point. Yeah, I'm gonna go for that one. A bit more aggressive than ideal, but I wouldn't really want price trading above this high because I don't see any reason for price to do that. It does trade into the fair value gap, which means that we basically could have gotten a little bit of a better opportunity, right? Not necessarily something that we would have gone for. So we have 65 means 130, and below this low we're getting exactly 130. So the take profit will be exactly there. Cool. Well, let's see if it holds. Even a better fair value gap before to execute on it with the stop loss up there. That's a bit of a reaction. Getting pretty close. I'm gonna move my stop loss to break even. Not interested in the loss anymore. Price, of course, could retrace and get close to it. And that's a take profit. Beautiful. 5 steps, lovely higher time frames, difficult lower time frames, but you can see there as an example, in those cases, we could even do anything at that point, because again, we had the 5 steps, yet I personally didn't trust it enough to go for it. So all that I did was wait for something else, right? It creates clear displacement with an okay fair value gap, and then I just waited for price to retrace a little bit more to have a better risk reward ratio, right? Which wasn't too bad nor too good, and that's really pretty much it, you know. It does continue going a bit lower. That would have been a break even, and it then continues going lower, right? Definitely would have been taken at a break even. And lovely continuation, so even the direction was right in this case, and maybe a higher time frame analysis. Well, I mean, look at that. Pretty strong high being taken as liquidity. So a retracement is definitely expected. And expected, or at least possible, right? Never think about it that way. Never think that because a super strong high or low was taken, price has to retrace, because it could comes up a tiny bit of a retracement and continue going lower, and then we're stuck in a trade that basically dies pretty quickly, right? Let me make a cut so I don't lose anything in the case the recording goes bad or something. So from the 50 minute, I don't see much because we had a fair value gap here, which price traded and caused a continuation. If we go to the 5, round liquidity, market shift, no fair value gap to utilize, tiny round liquidity, market shift here gives us fair value gap. It does give us a tiny bit of a gap in between this candle's low and theoretically the next candle's high. I don't like it too much, so we're going to be avoiding it, but the direction is definitely what we're looking for. And 15-minute market shift to the left. Well, actually, it's this one. Yeah, okay, now we just need to wait for something to happen from scratch, because otherwise we're just going to be forcing opportunities with stuff that is just not there. 15. I'm gonna draw this just to see what it does, because again, we could have considered this as a better market shift compared to this, but I just think it's forcing an opportunity, right? So nothing that I will personally utilize. We do have the fact that it takes out liquidity, right, from all of these lows, and even this one, sorry. And the market shift, now the market shift is actually this one, which doesn't give us any fair value gap, so nothing for us to use to the upside, sorry. Tracing to that, I know we're already outside of the kill zone. I just want to see what it does. I don't think we have a clear swing low in that. I don't think there is a swing low at all with wicks nor bodies. So that's it. I mean, sorry for that. Maybe we avoided a loss, maybe not, but well, who knows. I'm gonna go for the Friday. Okay, cool. 15, clear round liquidity, market shift to the left is here. That's great. We can use this, and maybe even another fair value gap later on. It is taking equal lows from there, so definitely be careful with that. Okay. Even the lower fair value gap was created, as we said. It could have. That is pretty much it from the 15. From the 5, round liquidity, market shift, fair value gap, 2 fair value gaps, 1 was mitigated and causes the continuation lower. So I'm not really interested in price actually retracing onto this one and continuing down, right? Continuing lower. We'll see what it does, right? We'll see what it does. Okay, so we're trading into that 15-minute. Definitely interested in these. We want definitely a good opportunity, right? But price, look at this straight line. We need something really strong to be created to then use as a market shift. And thing is that we do have what we're looking for, right? We have the, let me delete this. We know that we are in a 50-minute fair value gap. Remember that. Tiny round liquidity, market shift on this swing low. It is a swing low, right? It's pretty clear. And we get this fair value gap. I don't like the opportunity at all. But given that price has just gone lower, we could consider that all of this is liquidity for price to take, or inefficiency for price to simply try to fix. We're going to take a sell order, a market order, stop loss about this high, and I'm executing it like that because otherwise we're going to be waiting for price to retrace back into this fair value gap, which is of course possible, and based on the 5 steps, we'd expect that to occur. However, I prefer trading it like that. We are not risking too much risk to reward ratio, and at the same time, it is pretty much we're not risking too much risk to reward ratio, right? Because 2R is literally around here, right? So maximum target will be around this high. And basically, yeah, it's pretty much it. I mean, if price decides to go aggressively lower, then we're in, right? We're not being missed out. But we'll see. We would have been triggered with the fair value gap, a little bit of a better risk to reward ratio. And we'll see if it holds. And let me actually calculate the take profit. That's 51, which means we're going for 102. So you can see we're pretty close to that. And I don't like moving my stop loss at break-even because we're not too far, right? But it has moved 1.5% in our direction, so I'm not interested on it. What we'll do now is move the candle slowly, just in the case I did reach into 2,000 there. We're gonna close at that. Not happy if price actually returns against us. And I think that would have been a pretty good one. Okay. Getting pretty lucky with these, but at the same time, right, price could have retraced, take some buys of liquidity, continue going aggressively lower, right? Who knows? We'll see. Also, sells out liquidity, market shift on the 5, bullish fair value gap, right? Of course, after taking a win, we're not going to be taking another trade. We'll see how price reacts. We do have an entry right on this fair value gap, or this one actually. So that's something that we could be taking. Personally, won't do it because again, we already took a win and I don't want to take another one. Another trade, not another win. And as you can see, that's we avoided a loss basically just by keeping our risk at the minimum, right? And this opportunity will have given us 3R, 2.5 maybe R so far. We'll see if it holds down to the low. It doesn't, or does it? Okay, it does break the low, so keep in mind that we're going for this 15-minute fair value gap. The continuation of the trend is theoretically expected, right? So that means that we could have definitely be going right below that low and would have been a 3, maybe even 4R target that we could have taken. But of course, that means that we would have had to keep the entry open for quite a bit of time, right? Quite a bit of time. So yeah, and of course, holding through multiple, multiple retracements, right? Which is something difficult to do, but again, that really depends on the psychology behind each opportunity, or behind each trader. Sorry. Takes buys of liquidity, sells of liquidity as well. We'll buy some now. We could be looking for sells into this too for belly gaps, but of course we're already out of the session and even out of the kill zone, so nothing for us to be doing. And oh, that was actually an entire week. So we got out ahead with a 6%, I think. How much are we going? Let's actually check the account history. Not account history, statistics. We are 73 days already, 55 trades, not many, 36 wins, which makes it a 19 losses, which makes it a 65% win rate. Right? That's actually pretty good. And remember that there were some pretty clear losses that we could have avoided, but again, we're taking those losses anyways, so might as well count them in the statistics. Let me make a cut here. Okay, so I'm just editing this, right? And for some reason, you'll see that after I make this cut, we jump straight into the Thursday of the next week. And I'm not entirely sure how that happened, right? I made the cut. Maybe there's no way that I didn't record it because otherwise I should have realized in the moment, right? Can't really say for sure. Thing is that the next part that you'll see is basically me going through the Thursday, right? Through the Thursday of that next week. And sadly, I already took the 2% that we're missing out of this. So I was considering just taking it off and calling it a 6%, right? Because I think that will look more legit and everything, because I don't want you to think that I was cheating through this backtesting. However, it does have forward testing only, so that'll be a little bit too difficult to do. But well, I'm gonna keep this part, right? You do whatever you want with it. And yeah, I backtest a little bit of Thursday, talk a little bit about the results, and also backtest a little bit of Friday. However, I don't trade anything on Friday nor Thursday as far as I know. So yeah, enjoy this last little bit. Okay, bounce back. We get the market shift, but again, no for belly gaps. There's actually nothing that we can do with that. Run buys liquidity, market shift lower. We could be trying to sell. It's already outside of the kill zone. We'll simply analyze what it does. Okay, now I can continue. And so again, it's already outside of the kill zone, so we'll simply see what it does, if anything at all. On liquidity, market shift, fair value gap to execute from. Sadly, it pulls away. So the entry would have been lovely if it price simply traded a bit higher. Could have been executed with flexibility. Because if you think about it, with market shift here, well, actually, this is where theoretically we would have executed, so I hardly think so. And oh, we have Friday still. Okay, my bad. I was actually about to cut it here. That's actually a pretty interesting week, right? We recovered from those couple of losses. We went from 14% all the way up to 22.4% for now, at least. And that means that we made an 8% in this past 2 weeks, which is actually really good. Yeah, that's actually what we're looking for. Buy the liquidity, market shift for value gap. Nothing that we can do for now. The sales already happened. And the 5-minute has run a buy sell liquidity. But no area for us to sell. Market shift higher to buy, actually, based on this runs on liquidity. Market shift to the right, of course, which we don't like too much, but still happens. Might have missed out on something. Market shift here, fair value gap here. We actually don't, because the fair value gap is not mitigated. It could return into it, which is this one. All right. Personally not interested. We'll see if it holds. It doesn't actually trade into it now. Cool. 15 minutes. No, we're not gonna take that. News, maybe? A 10, I don't think so, but could have been. Insignificant run on sell side. And really aggressive price action. A 30? Yeah, kinda, so nothing for me to do here. And that's pretty much it. That's actually a pretty nice back testing on this couple days. And did we actually take too much? No, I don't think we took any more trades since we last talked about the 65.35. But that was lovely. That was lovely. 77 days, 57 trades, so we are 57% there. It's taken a lot of time, but it's definitely been worth it so far. And yeah, that's pretty much it.